Hello everyone, this is part 2 of trading gold price action, and let's get right into it, guys, because gold has already made the break-in support. By the way, go back to part 1 so that you catch up. This support, we expected for it to have made a pullback at least a bit higher than this wick, but we did say in our part 1 that price closed below the support, so that's why it didn't really fetch for much liquidity, and it just made a pretty interesting continuation push to the downside. We did study that possibility. We had said that would uh, the bearish idea come about. I think we said it would be something like this, and it's pretty much what it's doing. So that was also an interesting. We have to study why, right? So um, then again, we know for a fact that it was because it closed under the support, and that's usually textbook type of behavior. But you never know. I mean, the market isn't that. I mean, sometimes it has closed below. For example, over here, you see like we have this, we have these wicks, these candles and wicks. They closed below, but then the market comes back around. So it doesn't always happen, and because it closed so close to it, this candle closed so near the support, we liked initially a bullish rejection from here, at least back to the 1910s. um, but then again, this is what happened, and we are coming close to this bigger area of consolidation. And what we can do, however, check this out. I had made a similar projection, which was like this over here. A few this was last week, I think. Pretty much reaching that support and this important 1880s area where it's just getting close. So that's a lovely push where it's going, and yeah, stopping over here, consolidation. I thought it was gonna have a bigger reaction here, right? But it just kept going. It didn't wait for anybody. It's on its way to 1893, but I do see it at least probably in 1891. 1890 is an interesting psychological price and potential buying area, but again, wait, because look what happened over here. Despite this bullish candle, let's check that out in the lower time frames in our charts. This is 4 hour. Let's go to 1 hour. You see that? Despite the fact that we saw potential like upside momentum, also with this big candle closing, this all was just liquidity grab to continue. And we're not even in the market in the New York session yet. This is still London. It's 7:44 in the morning for me as I'm recording this. Here is an interesting um, wick right now that I'm seeing, but nothing that will surprise me yet for price to keep falling. I mean, right now is just look for sales. Look at all this, you know. Unless you see the market lose strength like it did over here, uh, that's that's not the case. It's not going to be the case. It's still falling quite in a vertical way, if you see. So it needs to eventually retrace. So it's just a matter of being patient. If you're in a trade or if you want to trade, I wouldn't trade right now to the buy side, because every time it tries to go up, it just fails to do so. And there's just a bigger, more um, more interesting area for price to keep falling towards. So yeah, don't don't rush it. Let's see if we go and see 5 minutes. Okay, so 5 minutes. Also, it's Wednesday, so we're starting to reach the middle of the week, and it's either market continues or it consolidates. That is an interesting bullish engulfing in 5 minutes, but it still doesn't mean much because here we did have similar behavior. It could be an eventual slower um, retracement, but you never know. Okay, so anyway, this was part two of our price action analysis and trading gold. The part one I'm going to leave somewhere at the end of this video so you can check it out. We we pretty much talked about why the market has been behaving the way it has, and this part two was meant to be for a more live analysis on what it could do in the near future. I intended to do this over here, but now we're here. So if you want me to illustrate, just to finish real quick, what this could do in New York session, which is in about an hour, well, let's open up our this is MKT sessions. I recommend this indicator. It's pretty cool. It shows me the the active sessions in a little box. So um, what happened? Study error. Okay, that's, come on. Wow, I don't know why it's not loading. It's really not loading. There you go. So you see London has created this range. New York still about an hour to open. London could make a lower low, but if it doesn't, what's likely going to happen is for New York to push and retest London's low wherever it makes it and look for more liquidity to the downside before falling. I mean, before going up a little more. So probably something like this, and then bouncing real quick up, looking to take London's high, to retest London's high, at least retest it. Once there, we have to see what happens, because that's going to be an interesting resistance area, of course, London's high, right? So once the market is in London's high, you could try to anticipate sales depending on market behavior again, right? Depending on the candlesticks and how they form, etc. Everything that you have heard me say. Should market take these highs, then it's just going to continue going up and potentially going back to Tokyo's highs, as you see, and then that could just be finally an interesting push up. If not, well, depending on how the market behaves here, it could just stay there for a little bit, create a sort of pattern, and then continue falling into this more, like I said, interesting support area. It's going to be too far if I go like this in the 30-minute candle, 30-minute chart, but you know this is a major support where there's a lot of liquidity, so that could happen as well. I'm pro this after seeing how it failed to bounce off of this support. Part one video I said I liked buying here, and I guess you're never always right, and it's just one way more to realize that the market has its, I mean, you can't always be right, you just have to study it. And I did realize that market broke outside the support. So I guess my initial analysis was right, for and just the facts are, hey, market is breaking, so don't fall for it, right? But as you can see, anybody can fall, and I did take a small buy here, and I lost because, I mean, if it would have made it, right? But those are common trading mistakes that even anyone can make with years after having been trading. So this is our idea. Um, I'm gonna take that out of the way to see, because we have to study. I would I would wait to see what happens around this area. Remember, New York does move a lot, so it could even push higher. You never know. It could push to the area where we expected it to go, which was at least over here, 1910, right? So if that's the case, probably something like this, taking Tokyo's high, bouncing back over here, and then doing any sort of pattern it would want to do here, and then just continue falling. Okay, so that could be something that we will see. Okay, guys, I'm gonna leave it right there. Have a wonderful rest of the weekend trading. This is my social media, and again, I'm not a financial advisor, and so please don't take this as direct order to invest your money. My content is for personal and educational purposes only. You can lose money, so risk little and trade at your own responsibility.